Today we will go over an extremely good trade practice talking about every single detail. We will do a top-down analysis to cover market structure analysis. Furthermore, we will learn how to find good entry points and tradable areas. Let's start now. Let's talk a bit about important price levels and how to handle trades when the price comes into these levels. For example, the first important question is after this level is taken out, what exactly should we be looking for in that moment? How can we react properly as traders? What is really happening with price action around this level? Will this price level be broken with a strong momentum and then turn into a support and resistance flip area, like in these examples? Or will these levels act as a critical points that signal a possible reversal instead? So, what clues and tips can we use to better understand what the price is telling us? First of all, if these levels are broken very strongly, there is a much higher chance they can turn into support and resistance flip points. For example, during a retest, you might notice a rejection wicks forming right at those support and resistance flip levels. This usually happens in continuation patterns where the price wants to keep moving in the same direction. However, if these price levels are broken and price immediately come back with large wicks or swing failure patterns, that has a different story. Once the price moves back inside the range again and keeps rejecting the same levels, there's a much higher chance of a reversal now. As you can see, this is not an extremely complicated way of looking at and reading important key price levels. Bitcoin had a really clean example recently. Once the price took out the previous day's low level, it briefly swept that area with a nice wick and then strongly moved back into the range. You can call this a swing failure pattern or simply a rejection wick, I don't care. The main idea here is that sellers were not able to push the price lower anymore, and buyers stepped in and reacted quickly. And in the next step, the internal structure was broken to the upside by the buyers. This clearly showed that sellers were very weak in the situation and buyers started to take control back. This was a solid trade example, and I noticed a couple of students on Twitter actually took this trade. I liked it. I honestly think it was a really nice opportunity overall. After that, price moved straight back up toward to the PDH, which is the previous day's high level. This was a classic move from PDL to PDH, or similar how the price often moves between PDH and PDL levels. So with this guidance, you can get a much clearer understanding of how the price may move around critical liquidity points. This also applies to any kind of structures like supply and demand areas, like order blocks where reaction often happen. Okay friends, this was a great lesson. I hope you liked it. See you next time and please take care. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.